Good day everyone, I'm Chan. Today, the topic that I'm going to be talking a little bit more about is whether Saudi or OPEC Plus is actually fighting oil war with the US. Why am I saying this? That's because on the 4th of June 2023, Saudi pledges big oil cuts in July as OPEC Plus extends this deal all the way into 2024. The size of this cut is 3.66 million barrels per day in total, amounting to 3.6% of the total global demand, on top of the 2 million barrels per day agreed last year and voluntary cuts of 1.66 million barrels per day agreed in April earlier this year. These combined cuts would last all the way till the end of 2024. However, it is my belief that this is only one half of the story that we know about. We are still ignorant about the other half of the story that is not widely reported in media. The other half of the story that I'm going to talk a little bit more in this video are based around two interesting developments. The first interesting development here is that the US begins to drain her strategic petroleum reserves again after a 3-month pause in withdrawal, even when the price of oil is stable between 75 to 80 US dollars per barrel compared to the highs of 2022. The data on her strategic petroleum reserves can be obtained from US Energy Information Administration. Why is US draining her SPR? What objective is it meant to achieve by draining the SPR? The second interesting development here that happens to coincide with the first development in the month of April itself is that the oil market is being flooded with paper contracts of 249 million barrels of oil. That's quite huge. What does it mean when the market is flooded with excess paper oil contracts? That means it drives the spot price of oil down, the price that we have seen so far in the last 2-3 months. So one has to wonder whether these kind of developments are further pushing the Saudis towards the BRICS bloc. Hopefully, this gives us a big picture understanding. In May, when Saudi's energy minister, Prince Abdulaziz bin Salman, warned speculators of manipulating the oil markets, we better understand the events that preceded the warning from the Saudis. What worries me moving into the second half of 2023 is that we may be in for a much higher oil prices. Why do I say so? This is due to the higher possibility of a short squeeze on physical oil from a combination of global oil inventories being at record low, with that many paper oil contracts on the market but without adequate physical oil to back up the paper contracts. Goldman Sachs and Josh Young from Bison Interest are both saying that there is a deficit in supply of oil in 2023. If there's an unexpected uptick in oil demand moving into the second half of June 2023, the risk of a short squeeze will just go up. That's it for today. I hope this short video is informative. If you like this video, please click like and do share with your community. Also, do subscribe to my channel for further updates. Bye bye.